All right, everybody. Happy weekend to all of you. We finished up the first full week of April, and the finish to the week was not what the Bulls wanted to see um, by any stretch of the imagination. I'm kind of thinking something like this. If someone was to tell you that there's good news and there's bad news, most people tend to say, tell me the bad news first. So we'll start with the bad news. There is some good news, but the bad news is we really have a set of pretty ugly weekly candles. And this is mainly in our growth and our tech space. It's right now SPX or SPY that's kind of holding up the market. You could throw DIA, the Dow, into that as well. We're going to begin here with the NDX weekly. And what we're going to see is not an encouraging thing. We've got a very bearish weekly candle, essentially showing that there was pretty continuous selling all the way through the end of the week, rejected at the 50-week SMA, and it sliced through and closed below both the 8 and the 21 EMAs. And unless there's just a rapid bullish rescue, and really there could be an opening week low next week on Monday, but there really has to be an enthusiastic response upwards. An inside week next week would not be what I would hope for the Bulls. It's got to be a much, much better week. And unfortunately, we're going to see other weekly candles that look a lot like that. So if I go to the Qs just right next door, you're going to notice it stands out a little bit more because I've also put the weekly volume point of control here. And this is the yearly look. And so we've accumulated a lot of supply. And that's really what that's saying. And unfortunately, the look from this week is that there were probably some trapped longs that wanted to get out. And I think they took advantage of this week. So we've got to be looking at the possibility of fresh yearly lows in a much more significant way than what we've been looking for, certainly over the last couple weeks. And yeah, we're going to see some of the details played out on some of the counts that I've got when we get into the smaller time frames. So let's just kind of continue to stick with the weekly time frames as we go through and kind of continuing that theme. These are things that aren't looking very good. We're looking here at IWM. And you've also got here a bearish engulfing candle on those bodies. Rejection again at an upper EMA and a close back through. And unfortunately, this is not a good look. And if I move into ARKK, you're going to see not a good look. And so we were hoping for follow through. We're hoping for higher lows that would follow through, but we didn't get it. So as I suggested, we've got to see an enthusiastic bullish response next week, or unfortunately, I think we're looking at a weight of evidence that's suggesting that we're probably going to be getting new lows coming. And you might be thinking, well, all that can happen in just the turn of a few days. Well, absolutely. The higher time frame candles are always the more important candles. And right now, when you see growth and tech and small caps beneath all of these weekly EMAs, this is not a position for confidence in going long. Let's get to the slightly better news. And we get the slightly better news, and we find that here in DIA. So it did hold its 8-week EMA. It's a doji candle, and you're going to see that elsewhere in places as well, indicating some indecision. And as we kind of go through with DIA and SPY, if they break down, we're really going to get a big market breakdown. Into XLF, XLF was not able to recapture any of its significant weekly EMAs. Maybe that's a hammer candle, but it has to show follow through, and we've got to see financials get back here. SPY and IWM have a large component of financials. SPY more of the bigger ones, and the regionals, IWM more of the smaller banks and the regional banks, and that has to participate. If we see further breakdown in financials, I think unfortunately, based on where we're at right here, the path of least resistance is down. Okay, and so we get to SPY, and really the one that's holding things up, although the candle body is a bearish engulfing. So it did hold all of its weekly EMAs. We'll talk about on the daily here, starting to lose some support. And as I mentioned with XLF, if this one breaks down, then I think we could really see a strong selling leg. So I wish the news was better. Those potential shooting star candles that we talked about in last week's video, they were confirmed. They did play out. Now, I've also circled here, in fairness, that we have incidents of past market advance where bearish engulfing candles did not always follow through down. And so we see that here in June of 2021, and we see it in January of that year. So not all hope is lost, and you could say that SPY could come through and save the day. It's certainly possible, but we at least have to be on guard for something a little bit more disappointing, and really, honestly, with those counts, kind of possibly devastating on the bear side. If we now look into some dailies on the SPY, we've got, no surprise, we have here an inside daily doji candle just beneath its 200 SMA. And this really shows you the indecision of these counts. When you see it on the small time frame, you'll realize the extent that this is what I would call binary or divergent or a coin flip is really what it's at here. And so we get into those small time frames, and you could see it could not be more different for SPX and SPY, because we do have a set of higher lows. We haven't broken down beneath the daily low from Friday or from Thursday or from Wednesday. We have the bullish count that we've got to nest 1, 2, 1, 2, 1, 2 into the sets of 3. So we leave that on the table, and we have to see SPY break down, lose Friday's low, lose this diagonal support, then we lose these 2 clustered lows for the week, and we do that, and we're looking to get short. Absolutely. And could that happen with the big gap down Monday? Absolutely. But until that happens, in my mind, it was just a coin flip. And I'm not one, especially over the weekend, to go ahead and put profit and capital on the line and risk with that coin flip. Now, anyone that would have taken that a small position as a lotto, I couldn't begrudge anyone that at all, because of what we can see here that's available within that bearish red. Let's now start working through other time frames here, and let's get into some daily charts on the Qs. So Qs lost its 50-day SMA on this close, rejected right there at the 34 EMA, and a one-day loss of that MA isn't the end of the world, but it's got to enthusiastically move up. And really what we're talking about is the start of a minor 3, and that's going to have to look exactly like what the start of minor 1 did. So you know we had a bad candle on there March 14th. We got an ugly candle here today, and we got follow through in March. And are we going to get follow through in April? That's kind of the big question right now. So into the small time frames here on the Qs. And we just had at the close, we just had a lower low of this daily low. So unfortunately, I had originally a 1-2 setup, but on that spike low, just right in that last 15-minute candle, there really isn't a bullish setup at all in the Qs. And what I mean is there's no higher low here to trade against on the Qs, right? It's lower than Thursday's low. It's lower than the other low intraday here on Friday. So unfortunately, it does look like if you held anything with tech puts over the weekend, that this is the more likely count. Okay, now it's still possible that even if we do move down Monday or Tuesday, that this just catches a deeper minor 2 fib. And that would be in between the 0.5 and the 0.62. So without that bullish setup, with really almost closing on the lows, what that pretty much means is Monday's either going to have to be a gap up that then sets a higher low that we can then trade against with this weekly low, or if it's a gap down, it's got to immediately reverse. Just kind of a gap down and go would be the bad case here in the red. Let's get into the other indices, and let's certainly take a look at ARKK. So ARKK here on the daily, and I had this possibility here, unfortunately, as we move to lower fibs, got to move this down, of an inverse head and shoulders. But you know that there's really no daily reason here. I already showed you the weekly damage, unless we see ARKK enthusiastically 10% up next week. So goodness, right? That's where the daily volume point of control is over the past year. And so we lose this fib at 59, and we lose this low over here at 57. And unfortunately, I think we're looking at new lows. So on the small time frame, it barely held at the close a higher low. So there is a possible 1-2 count, and that's tenuous, right? As close as that is to the first hourly low on ARKK, is it possible that we've got this potential bull flag here? Again, my proposal is I think Monday's got to be a gap up. It's got to get up and out, and it's got to start challenging towards that $67 pivot in order for this to have legs. We get into IWM on the daily, and it was an inside day. Negative, yes, but inside. It did close right on this potential diagonal support. I say potential because until it moves strongly off of it, and until it starts conquering these daily EMAs, it's got to get back above 203, 204. This is a suspect bull count. We get into the small time frame here, and this is the little bit of good news, just like SPY, where this is the 1-2, 1-2 setup, and if that can hold the Friday low on Monday's open, it's got a running chance. We also see, just like I showed you on SPY and QQQ, that we've got the downdraft. So this would be a small degree 1, 2, 3, 4 into these lower fibs, and which would obviously break the weekly low. And then after that, we've got the chance for a bounce in this leg C down. So I don't have that fleshed out in detail, but that would form, like you saw on Qs, a 1, 2, 3, 4, 5 down into this leg C. Okay, so those are the main indices and ETFs I wanted to take you through. Let's get into our individual stocks, and we can look at Apple first on the weekly, and then Microsoft, because there isn't a sign yet of weekly breakdown. So if these big boys can hold up, there's a chance that we could have some of the big name stocks rescue the market. There's no weekly breakdown. It is a weekly engulfing candle. There's no further loss of support here on Apple. And the same would be true in Microsoft. It's an uglier candle. It's just closing right on the 50 SMA. So tenuous. If we see Microsoft break down, that's absolutely going to usher in the tumble in Qs and in SPY. Into the dailies on those two, And you're going to see Apple holding potential minor 2 support. That's the bull count as well for Qs, along with Microsoft. Microsoft did not, or sorry, it actually set, I thought it was an inside day right at the close. It just set a lower low here. So it's within a bullish fib, but like I'm suggesting, we've got to see a huge bullish response next week. And I wouldn't have any guess right now as to what a catalyst would be. It would just be purely speculative. Is this an ABC down? Or we get into the smaller time frames here on Microsoft, and instead, are we looking at a 1, 2, 3, 4 with just the start of that down? That's exactly what we would have suggested in Qs. Okay, so if we see significant selling in these two names, Apple and Microsoft, loss of this weekly low, then we've got to be looking for much lower prices. A little more concerning here if I show you Tesla. And on the weekly chart, boy, this is an ugly candle. So you've got a rejection wick, you've got a bearish engulfing, and unfortunately, these are the kinds of weekly candles that can trigger multi-week sell-offs. It unfortunately has the look right here of January 7th. And that was exactly what I would suggest was true on the NASDAQ as well. That it has that weekly look right in here, right in there. It's got that kind of weekly rejection that triggered some big selling. So these big names keep tumbling. Tesla did actually hold an inside candle. So there's a chance that we can see bullish follow through. But again, it needs to be pretty immediate right away on Monday. Looking at some other names in here, and we've got some concern that Google has an overlapping 4 into 3. And we know that that's possible in an ending diagonal count for the very last and final leg up. But losing all of its daily EMAs this week, this week it did on 4 consecutive nasty days of selling. And the volume POC, there's just not much support here on the daily chart for Google. Facebook, it's possible Facebook is in a B bottoming zone, but if I show you on the short term, I think it's a little bit more likely on Facebook that we're not done, that this was just a B bounce, and we're kind of looking for the start of leg C down into another low. Now, I'm not calling for a fresh yearly low on Facebook, but it would be probably significantly low enough here that it would definitely participate in helping pull the Qs and the SPX down. We get into Amazon, and Amazon is at a rather deep fib for a minor 4. This is not out of the realm of possibility. And a deep 4 is possible when you've had a huge 3. But again, we don't want to see what Google did. We don't want to see 4 cross into the price of 1, because that just reduces the probability of this playing out. So on the small time frame on Amazon, let me get there as well. You're going to notice that this higher low, and I left this on purpose, we wanted a higher low against yesterday's low, and unfortunately it's got to be deleted. So I told you on Qs that there really isn't a bullish setup immediately into the week. You see it on Amazon. I mean, I can't buy that bullishly. The path of least resistance is down. And that's just me telling facts. And I wish it weren't that way, because we know how much easier it is to make money when things are going up. But we've got to be ready for the potential downside. Okay, that takes us through big tech. And you saw how weak ARKK was. And so we look at some of the names in it, and we get to Square, and we're just looking at a really bad candle. So rejected right at, really almost to the penny, the downsloping 21 EMA, we had a bearish engulfing, and we lost the 8. Square was not nice to me this week. I had 2 losing trades in it. Tried a lotto, tried a swing. They both didn't work. And that's the news from the market. When the market is giving you potential setups, higher low setups into potential fib support, potential structure breakout, diagonal breakout, retests, and it fails, that's the information that you need, that this is not a market that is healthy. And so we're seeing an inside day, and it's possible, just like IWM, that this is a super nest, and it's there. But remember, I've also said that when things are super nested, that actually reduces the probability of that count. So we've got to be leery here on some of these setups. We look at SHOP and we see something very similar, a much worse week comparatively for SHOP. SHOP is essentially hanging on to the bullish 0.618 fib, and this has a potential inverse head and shoulders look like ARKK. But again, it's got to be met with enthusiastic buying to try to trigger that up bullishly. We look at ROKU, and this is ROKU on the daily, and just kind of leakage all week since Tuesday. Just like SHOP, it's at a potential bullish fib, and this is going to have to be enthusiastically up. But as I suggested, was there an awesome setup to buy on a name like ROKU? It was better than Amazon, kind of like Square. Is this a 1-2, 1-2? And that is going to have to be resolved. Obviously, a Monday gap down that loses these lows, and the best setup is gone. And just for my money going into the weekend, this wasn't worth it, because you're basically gambling on a gap up save. To me, that's no better than a coin flip. We've got to move up, hold these lows, move up to a higher low to get me interested here. Okay, I also want to show you metals and miners, and then we'll take a look at crypto. So actually, no, I want to get a few more individuals, because we've got some big concerns in semiconductors. So in Nvidia, really awful week for Nvidia. Sliced through 3 MAs. Did it find support at the 50-week? And that's what the bullish count is requiring. When you look at a stock that is so far beneath, and Google comes to mind here, its daily MAs and its volume point of control, this is not the place to be aggressively entering long. And really, just like the Qs, almost closing on its lows today, this has to move enthusiastically up into a higher low to really even get me interested. For a position trade, it's just a gamble. It's really not in a healthy place. When you look at this on the chart, your position trade really comes on breakouts from key levels. And at this point, buying a dip becomes dangerous because we've got these extension leg counts down. AMD. And AMD also closing essentially on its lows. And AMD holding that March 8th low by pennies. And you ask about the probability of that holding again. This would be 1, 2, 3, 4 times holding that again. It did it back on March 8th, but this isn't the kind of candle that would get me confident that it can put that in. So unfortunately, AMD and Nvidia, the path of least resistance is down. Okay, now we're ready to look into some things that are healthy. And I say healthy in metals and miners because they're above uptrending MAs, but GDX weekly is interesting. And this, for bears would say that this is a weekly hanging man candle. Like price tried to stretch up and tried to break the late February, early March high, but couldn't do it. That has a little bit of concern. But we look at the daily, and we see on the daily uptrending daily MAs We see a close above this 39.30 pivot. This is not a daily topping candle. So I was willing to swing GDX, and I like the consolidation here. I bought right in here. We had some failed tests of these pivots that led to selling and stop outs, but I chose to buy that. So I'm going to swing this for a couple weeks, and as long as we're above this pivot, I'm going to hang on to it in a 3 of 3 count. And for GLD, you know, we obviously want the metal moving together with the minor, and it's above here, consolidation of really the entire month of March. And we look here on the daily, like GDX, its MAs are trending up, not a topping candle. We can even look out on the weekly. That's a nice weekly candle on GLD. So I'm feeling much, much more confident in holding, swinging, actively trading metals and miners than I am any other equity sectors. We should look at energy too. We look at XLE, and let's actually get into the bigger time frame. And it's a nice weekly candle on XLE, but what I want to point out is the highest weekly close of the year, but we have a year-long negative divergence on the RSI. And that is a signal that a top eventually will likely confirm that divergence. And so I just have energy kind of squeaking up into one last high. You know, I'm not smart enough to put all the macro pieces together and say with certainty that if oil goes up, stocks go down. If oil falls, stocks go up. I don't know that. What I do read is the price, and I see some concern here with divergence. I do think it's likely that XLE does break the yearly high for March 8, but I've kind of got topping patterns and topping fibs here where I would be on the watch for a reversal. Now, if that happens and oil reverses, does that mean that the inflation trade is over and stocks get a breather? And I don't know that either, because it could be entirely deflationary. And that would be the worst case scenario, is the everything down trade. Let's take a look at one silver miner. And I also entered AG on Friday, and you're going to see that AG is above all of its weekly MAs. On the daily, a nice daily candle above all of its daily EMAs. And that's where I want to be buying. So something that's been trending up, that pulled back to support, that moved back above through it. And I took an entry right here, right after what I thought was a fake breakdown. It recovered, it flagged, and I got in here, and I want to try to ride that just like GDX. So those are my swing trades for the month of April, and we'll see if that works out. Okay, so crypto, and you know, this is kind of back to the bad news thing. So crypto traded into today the high of this candle, which I had as a 1, 2, 3, 4. And so here is an Elliott wave rule for you. Within a larger degree 3, minor 3 of intermediate 3, wave 4 is disallowed to trade into the high of wave 1. And unfortunately that happened. Okay, so we have the low on Bitcoin at 40 to 424. And if I move back into our smaller time frame here, it's unfortunate that in order to make the count work, I would actually have to do some gymnastics here on where I set this high. I could set this high at this candle, which is actually beneath that price that I just showed you. When I'm forced to do creative things like that, it reduces the probability of this count. And so I don't yet have a decision on how to rectify this, other than to suggest that because of that violation, we now have to look at the possibility more seriously of this white bear count. And so let's think about crypto this weekend. If it continues to break down, if it loses here the 50-day SMA, there's really no support. It's just going to move rapidly down. And so nervous there. On the weekly, it's starting to lose its weekly 8 EMA. And that's really the lowest one of that stack, because even within the start of potentially this primary one or just a B wave bounce, it hasn't corrected these EMAs. So we've really got to take a look carefully at Bitcoin. It's on watch for a potential weekend breakdown. The others that I typically track in this space actually look okay. ADA and XRP are at least hanging on to counts. You can see ADA, what I think is a 1, 2, 3, 4, 5 into a 2. So there's not all bad news, but we definitely got to keep a watch on Bitcoin. Okay, so that's as far as we're going to go through anything. And I kind of leave you here with just really that coin flip binary action, looking at and thinking back about those weekly candles. If bulls are going to wrestle back control, next week has to be big. And really, I think because especially of where Q's closed, I don't know if we can afford a gap down. That gap down might just lead to continuous selling. On SPY, to me, it's the key. If we see the big breakdown in financials and SPY, that's what's going to usher it in. All right, so watch the video at some point this weekend, but please make sure that you take time for yourself and your loved ones. Don't spend too much time on the screens or on Twitter. I think we finally got a decent weather weekend here in northern Colorado, and I'm going to try to get outside and enjoy it. So have a wonderful weekend, and I'll check back in with you on Sunday night on the chat just to see how futures look. And then certainly we're going to be on our toes. There's a lot of meat on the bone. Whether we're trading up or down, we're going to try to catch these nice swings.